seconds from now. So let's get all set for that. There you have it. First tick on the index, it's a blowout performance right at the opening. The Nifty is up 160 points. The Sensex straight off the back up 600 points this morning. This turning out to be a terrific Thursday, at least at the opening. A lot of stocks in focus. Fusion Micro, by the way, is up 5%. We told you about that news flow a while back, but that's really the big mover in the broader markets. We'll get to that in a bit, 5.5% higher. But first, straight to the frontliners. The gains are led by IT. We've talked about that ad nauseum. Tech Mahindra, Wipro, HCL Tech, Infosys, TCS, all your top gainers up 1 to about 2.5%. That's pretty much ruling the roost this morning. But you have banks too participating. So the bank Nifty is up 500 points. ICICI, Axis Bank are all in the green. SBI is up about 1% as well, looking pretty solid there. Auto stocks also looking good. Eicher Motors is up about 1%. We've been talking about how names like TVS are sitting at record highs. So it's really a market that has many leaders. On one hand, there's banks that's supporting. On the other hand, IT is coming back. So what's not doing well? Consumption is not great. Nestle, Tata Consumer, Asian Paints, HUL have taken a bit of a backseat this morning. Pharma is not great either. Cipla, Sun Pharma are trading in the red. Divi's is just about flat. Titan is just about flat. So consumption and pharma have taken a backseat. It's really the rate sensitives, the high beta names that have come back in a big way. And now the Nifty is sitting at a fresh record high at 21,100. Terrific start.
Well, terrific start, Sonia. And just take a look at a few stocks, the way they're moving. IRDA, after the big rally we have seen, that's up close to around 10%. NBCC, well, they have won an order from NCDC, which is National Cooperative Development Corporation. So that one as well is up close to around 5% because the order win is to around 1,500 crores. IRCTC, they are eyeing a major expansion in the non-railway catering business, and that stock, in fact, is up close to around 5%. Vedanta, they're saying that they've managed to come up with a refinancing plan for around $1.25 billion. Yesterday, the stock ended at the high point of the day, so it's giving some part off after a gap up of close to around 2% today, but still trading in the green, one of the top traded stocks in today's trading session. GMR Power, yesterday there was a large trade. I don't think there was, we got any big disclosure out there. That stock, in fact, has opened up with a gain of close to around 3%. I'm highlighting it because it's one of the top volume movers in, initial trade itself. Midcap IT, we made this point in our morning chat itself that IT could do well. Midcap IT is coming back in style. Emphasis, Coforge, you have Birlasoft, Persistent Systems, some of the top gainers from the F&O midcap stocks itself. Few stocks that are a little bit under the weather. You have Chambal Fertilizers, that's down close to 100%. Nippon Life as well is down close to 1%. And GMR Airports, after the big run that we saw yesterday, that one is down close to 100%. But guys, what a start. Double century, the Nifty looking good. The Nifty Bank is off to the races. That one was the underperformer year to date, and now in fact it's looking to catch up in terms of a performance. If we pull up year to date of the Nifty and the Nifty Bank, you'll see gradually in the last 2 months or so it's been catching up with what the Nifty has done in 2023 so far.
We were discussing IREDA, right? IREDA is up another 10%.
Yeah.
It's 2 days back. I mean, we were highlighting how it's already at about 3 times price to book 1 year forward. So with the 20% over the last 2 days, it would be, it's obviously moved higher, but incredible run on that one. SAIL is coming up with large gains. So metals is another pack, right? With what we've seen with the dollar, etc. SAIL is up 2.5%. It's the second largest volume traded stock in the market right now. So very large volumes there. Tanla is another one. Tanla went up, I think, 15% yesterday. It's up another 6%. Huge volumes on Tanla this morning. 1158 on Tanla Solutions. I think we mentioned NBCC and Coforge, which are higher. Adani Green comes up with about a 4.33% gain. Again, volumes are very large. These the Adani Group stocks all saw some pullbacks over the last few sessions, but that one, Adani Green, is starting 4% in the green. JSPL, I think we mentioned 2%. So SAIL, JSPL, some action in metals and mining. You've got Emphasis, which is up about 4.5%. Stocks at about 25.35, and HBL Power. HPL Electric, which is the smart metering company, that is starting about at about 240 odd rupees as well. So it's a pretty good start all over. And mind you, volumes are terrific. I mean, so there's no dearth of volumes. 3:1 is the advance decline ratio. Still early to talk about overall picture in terms of advances to declines, but we are starting up. PI Industries, maybe just one more name. It sold off 10% day before. Yesterday it was down, I think, about 2% or so. That starts a little weakish once again with about a 1.25% cut. 33.88 is where PI Industries is starting at.
I just want to make one point, and I wanted you to weigh in on this as well. We talked about how the US Fed said that there will be 3 rate cuts. But we also should mention the fact that Jerome Powell said that that the US is not expected to go into a recession anytime soon, right? So he pushed back on the idea that the US economy is currently in a downturn, and that says a lot, that there is an expectation of a soft landing. This comes on the back of strong growth, and I think that's what the market is latched onto.
Yeah, I mean, it's like the immaculate disinflation, right?
Yes.
There's no price to pay. Growth will not hurt. Forget about recession. I mean, actually, that's the point, right? They are saying we are seeing rate cuts and coming into the view, but they've revised growth estimates, but it doesn't indicate that growth is going to be any weaker.
Yes.
Actually, if you compare growth estimates in the US to exactly 1 year ago, GDP estimates are about 2 percentage points higher as compared to where where estimates were in December of last year. And you got unemployment rate, which is still pretty low, and they're talking about rate cuts. So it's incredible.
If there was one way to make 15,000 into 50,000, what is that? 15 to 50?
Nigel, don't tell me.
IRED. You would say, I got only one lot. What's the difference? If you held on for the last 2 weeks, that 15,000 become 50,000, 55,000 approximately.
If you got that. If being the operative word, yeah.
Because I'll tell you on the day of listing, people are saying you maximum, retail audience could have got 15,000. But today, if that person held on, it's 50,000. So it feels a lot better, right? I mean, you feel Santa's coming with the bag.
So party would have been larger over the weekend.
There's another IPO which is on, which is seeing record subscriptions. The pencil and stationery maker, they were with us here in the studios. And I mean, you just had to see the subscription numbers that we got yesterday on the first day itself. So just incredible, the primary markets as well. For now, I think it's record highs, 185 points on the Nifty, 21,100. Nilesh Shah is with us, Managing Director at Kotak Mahindra Asset Management Company. Nilesh, great day to speak with you. It's always great to speak with you, but today it's special because we are back at new highs after spending just a few days dithering and maybe a little sideways. You've got political clarity. You've got this clarity now coming from the Fed itself that maybe the highs and rates are done and 2024 perhaps will start cutting. So they were very clear about that. Where does it leave us? It's almost too good to be true, but it is true. Go on, Nilesh.
So there are various ways of describing this, Prashant Bhai. One, as a kid, I'm sure you would have watched a movie called Drunken Master by Jackie Chan. The Fed is the guru of Drunken Master. They are earlier saying transient inflation, then say rates higher for longer. Then they say we will not hold it more than needed. Every move of the Fed was trying to create confusion in the market. And maybe he was the guru of Drunken Master, trying to keep market confused and actually achieving what they wanted to achieve. I think credit should go to US Fed for maintaining a very, very delicate, fine balancing between growth and inflation. That does inspire confidence in the markets on US Fed. The second way to look at Prashant Bhai is that the god seems to be Indian. We were worried about US interest rate rising. Santa Powell comes out. We were worried about oil going to triple digit thanks to geopolitical tension. God plays his role, and tathastu, oil is down to 75. We were worried about monsoon, and while the August rains were bad, September recovery happened. We were worried about central election, and the state election results give an indication. So now you have to believe that God is an Indian, stay invested in the market, enjoy the ride. But at the same time, as Nigel was mentioning, 50,000 becoming 50,000 in a very, very short period of time. I mean, that's not real. That is dream.
Yeah. People shouldn't get used to it, right? That disclaimer is something you want to put. But, Nilesh, I must say, if I can say so myself, that you are a lucky charm for the markets. Every time the market hits a new high, you're here sitting in front of us, talking about the market. So thanks for that. But I want to talk about how, if you believe this is India's sort of 401k moment, right? Because we are now seeing higher financialization of savings as well, something that we haven't seen happen in the last decade. Do you think we could de-risk from this whole foreign investments that we keep talking about? And do you think the next leg, the next expansion, the next leg of this rally will purely be led by domestic money?
Undoubtedly, Sonia. We have seen now about 7 crore folios investing in SIP. We have seen tremendous maturity of retail investors thanks to the works done by regulator, mutual fund, and our partner, the mutual fund distributors, which ensures that if there is a correction, there is more money flowing in. So whichever way we look at it, from a maturity point of view, from a flow point of view, from a momentum point of view, domestic investors will continue to play an important role in our market. And that has resulted into a significant thing, which is reduction in India's risk premium. Few years back, we were about 1.4 times more volatile than emerging market peers. Today, we are 60%, 0.6%, 0.6 times that, 60% of that. This hopefully should result into lower risk premium for India, and that might mean higher valuation can be justified.
Hi, Nilesh. Good morning. As I mentioned last week when we met, Nilesh, 15 to 50, I'm investing in my SIPs. I'm telling my kids the next 15 years will be super for the market, and they will, enjoy the fruits of what we are putting in today by keeping our SIPs going. So I'm keeping the faith in the markets. But, what about, for 2024 itself? This year has belonged to the mid and the small caps. At current reckoning, do you think that a higher amount of allocation should be to the large cap names? Because out there you have valuation support as well. And if the money is coming in, that maybe higher allocation out there would make sense?
Undoubtedly, yes, Nigel. Couple of things to support apart from valuation will be fund flow. As US Fed starts coming down and US equity markets relative to emerging market looks on the higher side, flows will begin on emerging market, including India. I was only looking at data today. On a 10-year basis, there are markets like China and Brazil and Russia and South Africa, which have given 1/2, 1/3 or negative returns compared to India. It's likely that India will be the biggest beneficiary of emerging market flows. And all these global investors ideally will more come towards large cap, which hasn't moved, which looks cheaper from a valuation point of view, and where there is liquidity. So overall, I see large caps closing the gap with small and mid caps in 2024. One more important point which we should remember today, there is a fairly large arbitrage funds, about 150,000 crore rounded off, which provide money to HNIs to take on any selling or build long positions, leveraged positions. So between the domestic institutional investors and even a product like arbitrage fund, which equips HNI to build leveraged long positions at a very, very competitive rate, the domestic investors' influence on the market is increasing.
Yeah, no, absolutely. Nilesh, let me ask you to comment on that phenomenon. I mean, I'm using only IREDA as an example. Actually, I was looking at, we get this data about what mutual funds bought and sold as a category every month. And a lot of mutual funds actually bought, I don't have the exact numbers, I think by about 750 crores worth of IREDA in November. But what do you make of the rise? And as you said, you kind of gave us a hint that obviously it can't be real. I mean, so just talk to us about that and some of the pockets of irrational exuberance, if we can call it that, Nilesh. And it's important to alert viewers, towards those points as well. Go on.
So, Prashant, you have correctly mentioned that there is a pocket in the market where there is irrational exuberance. One is the SME IPOs. Clearly, we are seeing far amount of money chasing stocks over there and valuation going out of whack. At this valuations to invest in these companies, they'll have to be like the team of Marvel superheroes doing incredible things to give return to the shareholders. Now, we do know that Marvel superheroes exist in comic and not in real life. The second thing is what I will call limited floating stock or controlled floating stock counters. There are PSUs where 95% is owned by government and 5% is with public. There are defense and railway companies where 80-85% is with the government and 15-20% is with public. Now, in this kind of counters, float is controlled in the few hands. They are all reluctant sellers. They are creating an illusion where a little bit of buying is resulting into valuation going beyond what normally should be. They are like, the USS Enterprise Star Trek serial Captain Kirk to boldly go where no man has gone before. Now, when you invest in those valuations, do remember that post-election government will do divestment. There will be supply in these counters. And at this valuation, they are unlikely to find many buyers. So there is a pocket of irrational exuberance in small caps, in limited floating stock counters, in SME exchange kind of IPOs, where one has to be careful.
Okay. Actually, I just wanted to take that IREDA discussion forward because, the government has set a very ambitious target, right? They have this 500 gigawatt of renewable energy capacity by 2030. So they are going all in this renewable energy sector. For someone, Nilesh, who has perhaps missed out on this rally entirely, not just in IREDA, maybe in something like an Inox Wind, Tata Power, JSW Energy, all the guys that are participating in this renewable energy boom, do you think it's too late or is there still scope on the upside?
So, Sonia, it's always difficult to say when the momentum will end. But let's remember that before Ukraine war, coal and thermal power or nuclear were non-ESG. When the push came to shove, the ESG definition was changed. Nuclear became acceptable, thermal became acceptable. So while undoubtedly, thanks to global warming, there will be focus on renewable energy, but there will be compromises, like at the time of Ukraine, like in COP26, COP28 right now. In Dubai, the fossil fuel producing countries forced a compromise on the conference. So there will be ups and downs in renewable energy. And hence, while you want to invest into a trend like technology, like generic medical, like chemical sector, be aware that even in those long-term trends, there will be massive correction.
Okay, all right. And Nilesh, it was great speaking with you. And hopefully the next time we meet, the market will be at another fresh high because you are a certified lucky charm for the market. Every time you come on board, markets are a new high. So thank you so much for joining us.
Thank you.
All right, well, that's a very smiley Nilesh Shah. Of course, it's all smiles. I mean, look at the market, right? 200 points higher on the Nifty and not giving up just yet. But let's talk about the consumption space now. TTK Prestige is the stock on our radar. Q2 was actually a weak quarter for them. Revenues, margins, both witnessed a decline. The management, in fact, when we spoke to them earlier, they did talk about some demand trends being under pressure, but they also spoke about improving demand Q3 onwards. TT Jagannathan, the chairman at TTK Prestige, joins us now to discuss how things are shaping up. Mr. Jagannathan, always a pleasure having you on the channel and season's greetings to you and your team. How is demand looking at the moment?
Thank you. It's green shoots are there. It's better than Q2. I won't say it's gangbusters.
It's not gangbusters, but at least it's better than Q2. The last time you said that demand will start improving Q3 onwards. So are we seeing signs of that? And also, you spoke about a flattish revenue growth in FY24. Do you stick to that?
Yes, the demand has improved in Q3, and we are expecting a better Q4 also. And yes, the year should be flattish.
Okay, all right. Hi, good morning, Mr. Jagannathan, and good to see you in as always. That would mean that the second half of the year, you'll have to see double-digit growth. So flattish for the year, we take that. Give us two more numbers. One is on margins. Earlier, you were guiding for margin band of around 15 to 17%, if I remember correctly. And on exports, it's a smaller proportion of your business. But what kind of traction are you seeing out there? And how much will it contribute in this flattish revenue number for the year?
To answer your first question, I did guide that our margins will be between 14 and 16%, not 15 and 17. And yes, exports are looking very good. We expect the second half to be 5 times the first half.
Okay. So, you spoke about how demand will improve Q3 onwards. But in the second half of the year, what can we expect realistically? Do you think a double-digit revenue growth is expected in the second half of FY24?
Repeat that, please.
So when you say demand will pick up in Q3 and Q4, realistically,
Yeah.
what can we expect in the second half? Do you think double-digit revenue growth is something that you can eke out?
Yes, for the second half, yes.
Okay.
Okay. But for the full year, you're saying things will be flattish. So good morning, Prashant here.
Good
On
morning,
that export, good morning, sir. On the export front, you've been maintaining that Europe actually has slowed down quite considerably. There were also
Yes.
inventory issues, etc. And you told
Yes.
us that by December, all of that perhaps will start getting corrected. Is that happening?
Yes, and I was right. It has.
So inventory issues are behind now, sir?
Yes.
Okay. So can you tell us what will be the performance, on the export side? I mean, how much
We
better
should
can
do
we?
about 100 crores this year.
Got it.
We did about
Exports?
25 crores the first half. We'll do about 100 crores this year.
Okay.
Got
Okay,
it.
100
All right.
crores in exports. Can you tell us a little bit about the premium brand that you were looking to launch, a new brand that you were looking at? What kind of timelines are we talking about?
We're still working on it. I'll come back to you when we're ready.
Nothing in this fiscal, is it?
No.
You are scouting for some inorganic growth as well, Mr. Jagannathan. Have you found the perfect fit? And before the end of this fiscal, we've got 3 more months. Should we hear something from you, sir?
No, I'm afraid I'm looking like idiot here. Every
No,
time
no.
we meet, you ask me about that money and that we're not getting fit. But we are slow, we are careful, and we are still looking.
So what could the ticket size be? But since you're looking, you're in the market, you're looking to cook up a deal, but you're not able to get to that. So what could be the rough target size you're looking at in terms of revenues or in terms of acquisition?
In terms of acquisition price, between 500 and 1,500 crores.
Oh.
In terms of revenue, about 1,000 crores.
Okay. And what is your current cash balance?
1,000 crores.
1,000 crores. Okay. So
Okay.
you can fund all of that via the cash that you have itself.
Yeah, nearly, yes.
And in terms of capacity utilization levels, sir, what are you functioning at? What is the capex you're going to be putting on board, and what will the asset turn be on that?
We are functioning at about 70% capacity. There's no need for capex for capacity. We are having some capex for automation.
Okay. So what is the incremental revenues from the cooker capacity that will come through both this year and next?
Building capacity doesn't mean there's a market. We'll have to wait for the market to grow.
Okay. You were talking about the slowdown in exports. Can you tell us by the end of FY24 and FY25, what will the export contribution be to the overall business?
FY24 should be again 100 of 3,000, so about 3%.
Okay.
FY25 should be about 3.5%.
Okay, just 3.5% of your overall business will come from exports in FY25,
Yeah.
right? Okay.
Yeah.
Any other big trends that you're noticing in the domestic market between urban, rural, tier 2, tier 3? Where are you seeing demand come back in a big way? Or is it secular?
It's secular.
Okay.
Except
All
rural.
right.
Rural is going slow.
Okay.
But otherwise, tier 1, tier 2, tier 3, metros, all secular.
And how much do you get from the rural market versus urban? Do you have a breakup?
We have an estimate. We don't actually have a breakup. Rural is about 10%.
10% of your business. So 90% you get from the urban market, which is picking up fine.
That is correct.
Okay. All right. We'll leave it at that, sir. Thank you so much for stopping by as always and giving us a quick check on the demand situation. So demand is crawling back and they expect the second half of the year to be better than the first half. But overall for FY24, it's still a flat growth that TTK Prestige is looking at. Let's slip into a quick break. In our special offering, Big Winners of 2023, today we'll be speaking to the management of NLC India. M. Prasanna Kumar, the Chairman and Managing Director, will be with us to discuss their business momentum. Later, we'll have Siddharth Jain of Inox India to talk about their IPO, which opens today. An interesting one there. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. The market's on fire. Things are looking very, very good. We're holding on to that gap up as well. And the tech index, as we pointed out earlier today, that's the one that's flying away. Yesterday it was nervous. Today it's bouncing back in style. Well, today we're focusing on the big winners of 2023. NLC India, that's one of the stocks on our radar. The green energy push has driven the stock higher as well. It's up more than double in this year itself. Mr. Prasanna Kumar, the chairman and managing director at NLC India, joins us on the show. Hi, Mr. Kumar. Thanks so much for joining in. Well, your viewers, our viewers, and in fact, your shareholders would be very, very happy with the kind of returns they've made. But let's focus on how do you see business evolve going ahead. Now, the COP28, the Climate Summit, ended with a deal to transition away from fossil fuels. You have also given us a guidance to increase your renewable capacity addition to around, I think, 6 gigawatt by 2030. Are all these targets on track? How do you see the energy mix transform for you?
Thank you. As decided in the COP28, the renewable capacity across the globe need to be tripled by 2030, and the energy efficiency need to be improvement need to be doubled. So, in line with that, already we are having a plan to add capacity, balancing between the renewable capacity and the conventional capacity. While giving more focus to renewables, we are equally giving capacity importance to capacity addition through conventional sources. As on date, we are having around 1.4 gigawatt of renewable capacity. And as you rightly said, we are targeting for 6 gigawatt by 2030. And already 2 gigawatt is in pipeline. Works are going on actively in the renewable capacity addition. So, with the increase in the renewable capacity addition targets, we are reviewing our target of 6 gigawatt, and we will be further increasing the capacity addition target by 2030.
Okay, so 6 gigawatt is your total renewable capacity by 2030, correct?
Yes, madam.
Okay, got that. You were expected to commission 2 gigawatts of thermal capacity at Ghatampur as well, and a new mining capacity up to FY25. With this, how much will the regulated equity for NLC increase? And this is this 2 gigawatt thermal capacity at Ghatampur is included in this total 6 gigawatt, is it?
No, madam. This 6 gigawatt is a renewable capacity. We want to be a 6 gigawatt company by 2030.
Okay.
That is renewable capacity.
Sorry. Okay.
Whereas
Okay.
we are targeting for a 17 gigawatt company by 2030, out of which 11 gigawatt is conventional and 6 gigawatt is renewables.
Okay,
And
sorry.
out of that 11 gigawatt, Ghatampur 2 gigawatt, that is part of that 11 gigawatt.
Got
And
it. Yes,
at
yes. So, no, so
Yes.
you said, okay, so 11 gigawatt is conventional, out of which 2 gigawatt will be at Ghatampur. What about the rest? And with this, how much will the regulated equity for NLC increase?
Ghatampur 2 gigawatt, the regulated equity increased by around 5,000 crores there. And then the other thermal power plants we are envisaging is in Talabira, 3 into 800 megawatt in the phase 1 and 1 into 800 megawatt in phase 2, with a capex of around 20,000 crores. In addition to that, around 2 units of first supercritical lignite-based power station in the country, we are envisaging at Neyveli with around 12,000 crores capex. So, with all these things, our regulated equity is expected to increase by around 8,000 crores.
So what will the number move to, sir, in absolute terms, post this 8,000 crore increase?
It will be around 15,000 crores.
15,000 crores. Got it. All right. Tell us about the targets. On coal production, I think you were talking about 14 million tons. You could correct me on that number for this year. What is the target out there? And on lignite mining side, you had some land acquisition issues, right? So revise those numbers for us by the end of this year. How do you see both these two numbers ramping up?
Last year, against a target of 8 million metric ton of coal production, we produced 10 million metric ton. This year, as per the mine plan, the target is 12 million metric ton, but we are aspiring for 14.4 million metric ton. And we are on the track, and our Talavera mine is producing, and we will be achieving the target of 14 million metric ton by the financial year end. Yes, you are correct that we were facing some land acquisition issues at Neyveli. Now, with the support from the state government, central government, and district administration, we sorted out the issues, and around 550 hectares of land is already taken into possession. So we are hopeful that we will be able to produce as per target as far as the lignite production is concerned.
Okay. I want to talk a little more about this renewable capacity, 6 gigawatt by 2030. Can you tell us what are the upcoming renewable energy projects that you're looking at over the next 1 to 2 years? What is in the pipeline and what are the challenges that still exist in terms of execution of these projects?
Madam, out of this 2 gigawatt capacity, around 500 megawatt is under CPSU scheme. Out of that, 10 megawatt is already commissioned at Neyveli. And 300 megawatt, the work is in progress in Rajasthan, Bikaner, and we already signed a power usage agreement with the government of Rajasthan. And 200 megawatt under CPSU scheme is under execution at Gujarat, and we already have consent from government of Telangana for signing power usage agreement. In addition to this, recently we won 600 megawatt in Khavda Solar Park of Gujarat. The work is in progress there. And in addition to that, we are having 810 megawatt in Rajasthan, in Pugal area. We won in the competitive bidding. There also the activities are in fast progress so that we can complete all these 2 gigawatt capacity by in the financial year 24-25.
So what does this mean for your overall revenues? If you look at NLC India, revenues have gone up from 12,000 crores in FY22 to about 16,000 crores in FY23. Now with this renewable energy capacity coming on board, execution of these projects as well, what will this do to your overall revenue growth over the next couple of years?
Last financial year, our revenue growth was very good, and we are expecting that we will be exceeding that revenue in the current financial year. We cannot exactly predict the figures, but we will be doing the better than what we did in the last financial year.
Okay. All right, Mr. Kumar, very quickly, if you could tell us how is your balance sheet looking as of now? And just give us the consolidated number about the capex you have from now till 2030, and how do you fund it?
Our capex target is 82,000 crores for addition of this renewable capacity as well as the conventional capacity. And out of this, with 70-30 for conventional capacity and 80-20 for renewable capacity, we require equity of around 20,000 crores. So with the internal resources and the revenue generated, we are hopeful that we will be able to fund this equity.
All right, so we leave it there. Thank you very much for joining us with all of that detail. I mean, fantastic performance in 2023, and we wish you all the best for a great 2024 as well. That's NLC India with a focus on the business. The market is up 200 plus points, so it's back to, double centuries in a single day. We had that, in the early part of last week, Monday, Tuesday, Wednesday, we had, one 400-point day on the Nifty, two 200-point days. And now we got one more trigger from overnight, which of course was the Fed sounding very dovish. 21,150, it's a new record high on the index coming through. Well, the primary markets are hot and buzzing as well. It's not just secondary market action. So let's focus on a new issuance. I'm talking about Inox India's 1459 crore IPO, which is open for subscription. The issue is entirely an offer for sale. And I have the pleasure of welcoming Siddharth Jain, promoter and non-executive director of the company, in our studios to talk about this offering. Siddharth, great to have you with us here.
Thank you.
Thank you for coming in. I just we'll get into what the business, etc. is about, but Inox is a name which investors in the secondary market are pretty familiar with. But this Inox is different from some of the other, companies like, there's Gujarat Fluorochemical, Inox, that part as well. Just tell us about the group itself, the structure.
Sure. Our group, we have 3 companies in our group.
Yeah.
It's called Inox Air Products. It's India's largest industrial gases company. We're a private company. It's a 50-50 joint venture with Air Products of the US and ourselves. The second company is PVR Inox, which most of you and your viewers will be aware of. And the third company is Inox CVA, which is what we are doing an IPO for right now.
So no relation with the other.
It's family, but no, there's no cross-holding or any ownership.
Tell us about the company itself now.
Sure. So this company was started 30 years ago by my father, and it basically specializes in customized cryogenic equipment, and we've been manufacturing this now for 30 years. And our end applications are the clean energy space.
When you say cryogenic, what do you mean?
So a good question. Cryogenics is any fluid below minus 100 degrees centigrade. So from minus 100 to minus 270 degrees centigrade, if you want to store, transport, distribute that fluid, you have to store it in cryogenic containers. I think the easiest way to understand that is if you go to a hospital and you see outside there's this white big medical oxygen tank, that tank actually has liquid oxygen inside it, which is at minus 183 degrees centigrade. But outside it's like plus 30, right? And you don't see that. That's because of the technology of the tank that keeps cold things cold inside. Okay, and that's what we do. That's what we specialize in.
Which is the big industries that you?
So we have 3 divisions. The first one is that of industrial gases. The second is LNG, and the third is cryoscientific. I'll just quickly go through them. Industrial gases as things like oxygen, nitrogen, argon in liquid form. And then we also have hydrogen, which is the new age, it's the final frontier for clean energy, as everyone's been speaking about. So liquid hydrogen is at minus 260 degrees centigrade. And we make, really critical equipment to store, transport, and distribute the same. So going forward, we recently supplied the world's largest liquid hydrogen plant being set up in South Korea. So the main baseload storage tanks for the same have been made by an Indian company and supplied to South Korea. Oh, wow. It's not a well-known fact, and which is one of the reasons of going public is so that we spread the message far and wide that these are the capabilities that exist in our country.
Siddharth, we want to talk more about the business, but before that, just some minor details. What is the promoter holding currently in the company?
It's about 99.3%.
Okay, and why did you decide not to do a fresh issue of shares?
So we actually are debt-free. We are cash positive. We're about 220 crores of cash on our balance sheet. Okay. And the main aim of going public is to gain visibility for our company. So we are, we're a dominant player in India, but our market share globally is a very low single-digit percentage.
So you want to gain market share glally as
exactly,
well? And promoter holding post the issue will be how much?
75%.
75%.
That's right. 75.
So it'll come down from 99 to 75%.
Yes.
Pretty interesting business, Siddharth. But I wanted to ask you about pricing of this IPO.
Sure.
Last couple of years, the promoter entity, they have bought at 30 and 100 rupees. What's changed so drastically that in 2 years from then, you are coming out with this sort of an IPO price? That must be something that changed.
Pricing is decided by the bankers based on, our past performance and projections for the future. And if you see our growth over the past 2 years, we've grown at approximately 27% CAGR. In fact, for the first half of this year, we've done about 580 crores in top line, about 145 crores in EBITDA, and about 103 crores in PAT. So on an annualized basis, that's the way the bankers kind of come up with the valuation.
Well, that's pretty good, right? You're growing at 25, 30% or 40%, but the IPO price is at nearly around 5.5, 6 times to what you all are taking it. But I take your point on board. You believe the fundamentals have changed, and that's why, in fact, bankers are justifying this price. Got it.
Right.
You told us there are 3 verticals, industrial, LNG, and cryo-scientific, I think so.
Yes.
Your order book is around 1,050 crores.
Yeah.
Break it up for us, segment-wise.
So about half of that is in industrial gases, 25% is in LNG, and 22% is in cryoscientific. And just to take you on LNG, LNG is liquefied natural gas. Now India has 6 import terminals of LNG. And globally, it is the near-term transition fuel from, diesel and LPG. People are converting to LNG, which is the lowest CO2 emitting fossil fuel. So the adoption of this globally has already happened at a pretty rapid pace. but it is currently a supply constrained market. So there's not enough LNG molecules available. As and when more molecules are available, we will see a much larger build out of the infrastructure.
Sorry, what do you mean, LNG molecules?
LNG is manufactured, it has to be liquefied. Correct. Wherever natural gas is available, some of the biggest countries are like Qatar, Algeria, yes, Australia, the US. India doesn't have any LNG manufacturing capability. We import LNG. But once it is imported, it is, other than pipeline, it is distributed in small-scale LNG in cryogenic tanks. Right. And then it goes to end industrial customers and is regasified there.
You know, you said your order book is 1,050 crores.
Yeah.
So just tell us about the order cycle. When you get an order, I mean, typically, what is the size of order? How long from when you get the order to execution?
Anywhere from 4 months to a year. So half our book are standard tanks, half our book is non-standard tanks, which are solutions that we provide.
Okay.
So, for example, a hospital would be a standard tank. But if you go to an industrial customer with an LNG infrastructure who requires LNG, that would be a solution. Recently, the government of India announced 1,000 LNG fueling stations along the Golden Quadrilateral, so that diesel in heavy-duty trucks is replaced with LNG as a fuel in the heavy-duty trucks, and this has already been commercialized. I think 30 out of the 1,000 fuel stations are under commissioning right now, and your large OEMs like Tata and Eicher and the others, they have already launched commercial models of LNG fuel trucks, which emit lesser CO2 and in fact are cheaper as well.
So, you started by saying that you're looking for more export visibility.
Yes.
What is the opportunity in the export market? Which are the geographies you're looking to penetrate?
Sure.
And in terms of numbers as well, what do you think the growth could be?
Sure. So I'll give an example of our cryoscientific division, which I haven't spoken about. One of our oldest partners in cryoscientific has been ISRO. So the launch pad in Sriharikota that has been built, our company played a major role in building out the entire cryogenic systems for the launch pad in the early 2000s. And apart from that, we've delivered a host of other equipment to ISRO. Now, there are other global scientific projects. And, in Europe, there's a project called ITER. ITER is the world's first nuclear fusion project where 7 countries, including India, have come together. I think it's a $20 billion project. And we are supplying extremely critical liquid helium pipelines for the core of the nuclear fusion reactor.
You've already bagged that project.
We have, and we've executed it as well already.
What is the quantum?
That was, I think our overall was just south of $100 million. Okay. But this has happened over the past 5 years.
In the next 5 years, what's the visibility like?
So the purpose is that since we have done that, not many people know about it. Now, if you were a public listed company, more and more people would know about this. So like the ITER project, there are other projects in the world like FAIR in Germany, the CERN project in Switzerland, and others in America and other. Once we have this visibility, it makes it easier to explain to the rest of the world that we have this technology or this company who designs in India, engineers in India, fabricates here, and for the world. So our entire story is to explain to people, the quality of the products being made in India and being exported all over the world. Okay, all right. So it's going to be a win for y'all because y'all are taking some money off the table. Win for the company, you believe, because they'll get more visibility. Now the shareholders will want to understand whether it's a win for them. That we'll know in the times to come. Quickly, before we let you go, 2-part question. One is, I think you're operating at around 70% capacity utilization levels. So at optimum levels, what can you do? 1,500 crores of revenue, 14 to 1,500 crores, point number 1. And point number 2, your margins have been in the vicinity of mid-20s. At current reckoning, is that the number we should be working with going ahead as well? So we currently have 3 operating facilities, as you rightly said, operating at 70%. We have just invested capital. In the first half of FY24, we've put in 80 crores to start our 4th manufacturing facility. We always invest ahead of demand. Yes. So we are predicting demand to come. Okay. And what we do is set up these large sheds or manufacturing shops where you can keep making equipment. So it's a bit of a misnomer to talk about capacity. It's not like an automotive line where you keep churning. These are engineered products.
Yeah, let's make it simple then, Siddharth. What is the peak revenue potential you can do? 80 crores is what you put in. There'll be an asset turn on that as well.
In the past, we've done an asset turn of 4 on our gross block.
So 320 crores?
Yeah, well, there's no dearth of capital. We can keep investing based on the demand. If the demand doubles, we can put in a lot more capital. It takes us 6 to 9 months to set up additional capacity.
Okay.
Coming to the margins, our margins have been relatively healthy between in the early 20s for the past many number of years, and we certainly hope to continue that, if not improve it.
Okay. Well, interesting company and a new kind of, I don't think we have any listed peers for you. So great to speak with you, Siddharth. All the best for the IPO. You said you're listing so that you get more visibility, but along with the visibility, you'll also get the quarterly earnings monkey on your back. So
with great power comes great responsibility.
We're used to that.
So I think we'll speak with you again soon. Thanks very much.
Thank you. Thank you for having me.
All right, that's Inox India with the sort of IPO as it opens. It's open for subscription. 255 points in the Nifty. Markets are looking absolutely strong. Mitesh is back with us with a quick check on things in terms of what he'd want you to do. Mitesh, hi, morning. Super strong.
Super strong, Prashant. And I think, look at the Bank Nifty. I was making this point that the Bank Nifty will now start catching up for the underperformance. And the Bank Nifty is doing very well. The Bajaj twins, Bajaj Finance and Bajaj Finserv, which also have been underperforming, are also trying to catch up for that. So I think that's where the focus should be. I have, in fact, a buy on Bajaj Finance and Tech Mahindra. Bajaj Finance is a buy for me with a stop at about 1703. Look for targets of 1775, Bajaj Finserv. And Tech Mahindra is a buy as well. Keep a stop below 1235. Look for targets of around 1300.
All right, well, let's do one thing. Let's take a short commercial break on that note. When we come back, lots more on the markets. Do stay tuned in.
CNBC-TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Well, the markets are holding strong. And yesterday, in fact, TVS Motors was the stock of the day. That was higher in trade. But today, in fact, it appears that holding company, TVS Holdings is moving higher as well. And that stock, in fact, continues to move along while TVS Motors is more or less flattish. So pull up TVS Holdings. Volumes as well, pretty high for the first hour of trade on TVS Holdings, up close to around 5%. But let's turn our attention to the commodities market. Then Manisha Gupta joins us to tell us what's going on there. Manisha.
Well, thank you for that. The narrative for all asset classes clearly has been the US Fed meeting, where we've seen unexpected lines, rates unchanged, and projections of 3 rate cuts in the next year, that is 2024. And that clearly has led support in case of commodity markets as well. We have seen the dollar index decline. We were trading at around 103.5 in the markets 24 hours ago, and we've seen it slipping to 102.5 at this point in time. So a lot of support really coming in from this movement, as most of the commodities are dollar denominated in the international markets there. I'll start with energy, and we have seen the crude oil prices gain up by nearly a percentage point. We are coming back from a 4% decline day before. So there's some support coming in for these markets there. Also, when you look at copper and aluminum prices, we've seen support here. So copper and aluminum both have gained by a percentage point in the evening yesterday, and we've seen that kind of a reaction come in for the Asian markets as well right now. Energy markets then and the crude oil prices have gained a percentage point as well. We are back above $74 a barrel, and we're just about holding around that 70 in the WTI markets as well. Apart from that, we also have seen a decline in US inventories that has been supportive. The natural gas prices, after declining 10% day before, have seen 3% of gains as well coming in. The markets also are looking at concerns on the Red Sea, where we have seen tanker attacks coming in. So all of those factors really supportive right now. Talk about the precious metal prices, and the best of reaction really has come in for this one. So if you look at the gold prices, we are back above $2,000 per ounce. Yesterday, same time, we were trading at $1,980. So it has been a $50 of a jump up in case of gold prices. Silver also has gained by nearly 4.5%. Markets have seen physical buying continuing, in any case, in Asian and Chinese markets, and that has been supportive. I quickly want to take you to what we've done in case of all of these commodities for the year as well. So there's very small pockets which actually have seen gains coming in. When you look at the base metal prices, copper is the only one that's in the positive. Aluminum is 12% down in this year until now. If you look at the energy basket, that is trading in negative for 2023, 60% down for natural gas, 8% in negative for the crude prices also. And finally, when it comes to the precious metal prices, well, this is what will surprise you. Gold has outperformed silver in this year with 14.5% of gains at this point in time. But the global central banks are not done yet, and you have the Bank of England and European Central Bank meeting as well today. Statements from there and will also tell you on where we are moving.
All right, Manisha, thanks very much for that. That's commodities in focus and for the year as well. Well, we'll take a quick break here. My colleague Lata will take the next conversation forward. She'll be speaking with market veteran Ramdev Agarwal of Motilal Oswal Financial Services. We'll, of course, discuss markets which are at new highs, but we will also discuss Motilal Oswal's annual wealth creation study. Stay tuned for that exclusive conversation coming right up after this quick break.
CNBC TV18, embarking on a quarter century of excellence.
Now he said we can.
It's a huge day for the markets, and we have with us, well, should I say, hugest or the biggest of market veterans, Ramdev Agarwal of Motilal Oswal. His team has just completed their 28th wealth creation study, and over the past many years, I have noticed each study gives you a gem of a lesson to find wealth-creating companies. This time, Ramdev says, don't just look at accounting profit, look at economic profit. Look for where sector trends and the company's own endowments gives you a hockey stick return. Now, I'm really excited about the hockey stick return. More from the man himself. Ramdev, thank you very much for dropping into our studio.
Good morning.
Well, first up, look at the ambience where we are meeting. The markets... 2 months back, 5% risk-free return in the US yield. Today, it is below 4%.
Is it gone below?
Yes, 3.97 when I last checked. So, should we actually prepare for higher multiples now?
You see, markets are not mathematics. I mean, yes, kind of a significant reduction in the interest rates would warrant, re-rating in terms of higher P multiples for the stocks, which is a logical other thing. But if it is, cyclical upturn, downturn from, say, 1.5% to 4%, 4% again comes. So this is a cycle. I think stock markets, they are already priced in this kind of movements. Okay. Unless this 4% goes to 10%, 12%, obviously the multiples will fall. But I don't think this requires any kind of a major adjustment in the P multiple. So we are at about 2022 in India. So if by chance the interest rate comes down to 3.5% or 3%, that doesn't mean that we deserve to get 30 or something like that.
Oh, no, not that much.
Yeah.
Well, I thought one standard deviation higher, even that will help because,
somewhat,
if you're going to grow at 15% earnings.
It's a tailwind for business valuations. I mean, how much, I don't know, but it definitely is tailwind.
Okay. Now, what has come from the FOMC, the dot plot, they vote on GDP and inflation. They've all brought down their inflation forecast and hence the rate cut, number of rate cut has increased. But they have not brought down their GDP forecast. In fact, for the current year, GDP forecast has been adjusted higher because the last number from US was 5.2. So, therefore, Fed is endorsing Goldilocks, you think?
Of course, they are themselves surprised the strength in the economy despite inflation and whatever difficulties they had. So clearly, it's a terrific time for US economy, but India has, despite all the difficulties world over, we have brilliant time. Goldilocks is on in India even earlier than US. So
I think by ourselves, we are in a Goldilocks.
Last quarter, 7.6%, when the world is at 1 or 2%. So the gap between the global growth and Indian growth is distinctly higher this time. And now the knowledge people, RBI and all, they're projecting even next year to be as exciting, and even after that also. So if by chance Indian economy actually grows at about closer to 7% in 24-25, I don't think that's there in the market.
No, that's not priced.
Yeah, that's not priced.
Yeah, we are still talking about 6.5. I want to come to your hockey stick returns.
Yeah.
As you say in your study,
Yeah.
think stocks, not markets. But today, we have to talk markets for a little bit more.
Yeah.
Does this look like 2004 to 2007 to you now?
Yeah, I mean, I have seen 4 bull runs. See, welcome to the bull run, okay? We are properly in the bull run. And we had the biggest of the bull run was 1992, Harsha Mehta bull run, when the market went 7x in 19 months, from 6,700 to 4,200. So that time it was a liquidity-led bull run. There was no support in terms of corporate earnings and all, but it was just a liquidity-led, and liquidity suddenly went out. This time we have the fundamental reason where GDP is growing well, corporate profit is growing at about anywhere between 15 to 20%. Right now, my analysts are saying for next 2 years.
24% this year and 14%.
Yeah, so they're saying about 18-19% compounded 2 years return, growth. So we have a very good support of the corporate earnings growth, and we have an amazing amount of retail liquidity just pouring in, and in a predictable way. My sense it's a 5 to 10 year kind of run, and grand finale is ahead in the stock market. So we are in bull market, and bull market always ends badly. So be ready for some kind of though we have a fantastic regulator, we have all kinds of digital surveillance. They can always control it. I hope they control it in time. But the size of the liquidity which is entering because of this almost 3 million accounts coming every month. Now we have crossed 130. We are at about, I think, 133 or 135 million accounts. Every month it is climbing. My sense is we are heading for 250, 300 million accounts in the next 3-4 years. So till this journey continues, I think we'll have enough local liquidity. Now foreigners, they have to decide. They lost 3% share. They sold at 16, 17,000, 18,000. They sold 2-3 lakh crores worth. And now when they want to buy back that same quantity,
it's coming at 21,000.
Yeah, so they have to pay that price. I think we earlier discussed that. So I think, but then I think real fun will be that money will be taken away by the companies. You see how many IPOs are there, how many block deals are happening, how many private equity exits are there. So now money will, at some level, promoters will find it attractive for the unlisted companies to get listed, listed companies to go for aggressive expansion and create infrastructure and give a good kickstart to the private capex cycle. So my sense is that we are in a fantastic, government is having fantastic time in getting the tax, and hence they are blowing it in the infrastructure. And if the private capex starts, they'll get more taxes. And so I think,
we are in a virtuous cycle.
Yeah, so that kind of thing looks right. And valuation is also at about, another thing which can go wrong in the market is that are you crazily priced? So yes, at 4 trillion to a 3 trillion GDP, we are fully priced, but still okay.
Okay. No, I take your point. But who are the beneficiaries? I mean, now to come to your study itself, before I come to the hockey stick, you say that PSU banks are one party that look, ripe for gains.
I mean, it's not only PSU banks for sure, because they have been beaten down so badly, and they have size, they have brand equity, their distribution, they have the deposit franchise. So everything goes for them, just that their past is very bad. So obviously market will remain skeptic about what will happen in the future. But since the management style has changed in the sense that interference from Delhi has almost gone or gone totally, and they are being managed in professional way. Credit cycle is very good. Credit cost cycle is kind of very favorable. Banks are actually, they have a net positive, I mean, their recovery is more than slippage.
Yes,
so
yes.
apart
Credit
from,
cost will go negative.
Yeah, so this is a cycle. I mean, generally, these are the typically end of it. See, 1 year you have more recovery than slippage. Almost you are coming end of the cycle. So I don't have good understanding of where the economy is, I mean, is it getting over?
Last time, the good cycle lasted for 10 years. You remember they started cleaning up in 2002, 2003.
Yeah.
And then till 2013, the banking cycle was...
Yeah, but 2007-8, I think it just peaked out. It is in stock market.
It peaked.
So it was about 5 years, 6 year kind of thing. We started in 2021. We already done 2 years. Okay. I hope we have 3-4 years in our hand for the grand finale.
Fair point. Now, let me come to the large caps. It's common knowledge now that the small caps and the mid caps have done very well. It's the large cap index which is lagging. Do you think that, therefore, it is safe to go with the large caps? And in particular, I think we are running along, when you speak, the fastest in the last 5 years. The largest wealth creators. Now, you point out in one of that, HDFC Bank for the first time is not there in the fastest or most consistent. Biggest.
Yeah.
So, do you think its time has come? Should we therefore look for those kind, or because it's not there, don't go there?
See, this is a proper bull market. Everything is going perfect. You have to be a good investor. Being good investor doesn't mean mid cap, small cap, large cap. It is about finding the right idea. Right investment idea at reasonable price. See, if you're finding a big bank to be very reasonably priced at less than 1 peg or something like that, HDFC, ICICI, Kotak, whatever you like, that's also a good idea. But if you're finding a smaller bank in the same parameter even more attractive, you must buy the smaller one also. Or there are some businesses which are fundamentally mid and small. Like small is also not anymore small. Small is now, I think, about 18-20,000 crores. The biggest small is about 18-20,000 crores, and mid is the smallest mid is 18-20,000. So we are not talking about some
the small
few
like
hundred. Yeah. So you have now enough size. So let's not discuss this SEBI classification for investing. Investing must be at the. It's unfortunate that because
it should be cap agnostic.
Yeah, this cap has become very important because the mid and small index has done 30-40%, whereas the large cap has done 12-13%. It is purely because of the movement of the FI interest in India. They typically buy and sell large cap. And since they were absent, in fact, they were selling, the large cap remained depressed, and all the money went into mid and small, and they kind of. So my sense is that one should look for a good idea. Because large cap has, say, 100 companies, mid cap has 150, but small cap has thousands.
Yes.
So you'll always get some spot where you'll find ideas. So I think you should chase a good idea, and this study is actually a framework to find those ideas.
Okay, let me come to that study. You're speaking about hockey stick returns.
Yes.
And you specifically refer to companies like Astral, Bajaj Finance, Ratnamani Metals, Tata Elxsi. I hope I'm quoting the names right.
Yeah.
Now, those are the hockey sticks that have come.
Yeah.
Where will you look for the next hockey stick?
Yeah, so that hard work has to be done by the investor himself. Okay, I have given the framework. See, we read the book, the Hockey Stick Strategy, Strategy Beyond Hockey Stick. So that's the book. I think fantastic book on strategy, very practical. And this is a way, if you read the book and figure out. So they have talked about concept of economic profit. The first thing is economic profit. And as a chartered accountant, we have done accounting, and there we talked about always net EPS and net profit. But very simple thing is that when you do net profit as per accounts, you don't charge for the equity. You charge for debt, you charge for everything.
You don't adjust for cost of equity.
Cost of equity. So if you just take a simple, instead of going through some alpha beta, if you just take the cost of equity as 10%, because last 10-12 years return has been about 10%. So you take 10% for all the companies. You arrive at, so we have given an example of a company like, I think, IOC and Nestle or something like that. So one company uses 1 lakh crore of equity and profit is, say, 5,000-6,000 crores. So actually there's economic loss. Whereas other company makes, say, 2,000 crores profit or 2,500 crore profit, but uses hardly 2,500 crores. So economic capital charge is just about 250 crores at the rate of 15%. So his economic profit is 2,250 crores, whereas the other guy, though looks giant, is actually economic loss. And that's why market has punished also.
Yes.
Market cap of the smaller company is much bigger than market cap of the large giant company. So that, to some extent, see, in market you cannot explain all the difference in valuation, but yes, this explains what market values. So we are not practicing it, but market is practicing it somewhere.
No, but if by your logic of economic profit, you have given us a list. I'm trying to find that in your list. The list of companies with highest economic profit and not accounting profit also includes SBI, ONGC.
I think
so you think their day has come?
TCS is the largest at about 30,000 plus crores of economic profit. Then, so we have given entire Nifty, the entire list of where exactly they stand in economic profit. What happens is some of the companies like, say, Reliance doesn't show as an economic profit company, but they are amalgam of 3-4 large businesses. So they are making tons of money, economic profit in their original business, but they are probably investing in Jio and retail and a whole lot of other things. So that's why the fused company looks to be like not making economic profit.
But the petrochemical or the...
Yeah, so it's a sum of profits kind of situation. So one has to analyze, but basically when you are looking at single stream companies, simple companies, you know, their economic profit as a concept is worth pursuing. And what this study is about, I mean, the book is about, is that you must measure the success of the companies in terms of economic profits, and economic profit is distributed in a power curve situation. So it goes like this. So the 80% of the economic profit is in the top quintile, so 20% of the companies, and 80% of losses are also in the bottom quintile. So you have, and then middle, 300 companies, they are all gone nowhere types. That's
so you
where
have to look at companies migrating from the...
So what he's saying, the strategy is you find a company at the middle and what it takes to go from middle to the top quintile.
Okay.
That journey of hockey stick. When they do hockey stick earnings growth, market gives them, with the re-rating, super hockey stick returns. Okay. So economic profit, the measurement is economic profit, and the way to go about is, there are 3 steps he's saying: endowment, trend, and moves. So what is endowment? So any company starts its journey with some kind of endowment. So they have competitive advantage, they have brand, they have distribution, they have people, they have businesses, relationships. Those are all starting point.
Yeah. Okay. The endowment of the company.
Yeah, but there is no tailwind in the business. Yeah. So, I mean, the company will stay there only. I mean, there cannot be better person than me to talk about the benefit of trend. Yes. I'm telling you, in capital markets for last 10, 12 years, we've done so much of action as a corporate action. Whatever is possible, we have turned the mountain, I'm telling you. And yet nothing much happens. I mean, we're doing well.
You saw just
it's between 2008. See,
the decade of 2011.
Yeah, so we have a lost decade, despite massive action when I look back.
Yes.
But nothing happens because there is no trend. Now from 2020, the trend has started. We are literally 10x in 3 years in terms of profits.
Absolutely.
So that power of trend is massive. Every business is different.
The trend is whom now? You just spoke about government is into capex.
Yeah.
If they spend the money and private capex comes. So do we look for capex companies?
You have trend and trend all over. Like there are multiple trends. Like you play Scrabble. I mean, your opponent cannot see what trend you are seeing in the building. Okay. It's like that. There are so many trends. The whole universe is full of trends. Business is full of trends. So something is happening in terms of IT, something is happening in AI, something is happening in real estate demand, something is happening in the cost structure of cement companies, something is happening in pricing of cement companies. So you have to find that trend which is on which you can bet. And trends are short-term, long-term, cyclical, secular. All sorts of things are there about trend. Just think about it. You can keep thinking about trends. But without positive trend, so it's like a skeleton where a person is running. On top of it, you get a skeleton. Okay. And then you go at the speed of he himself plus a skeleton. And when the company's trend is headwinded, you are as if you are kind to come down and the skeleton is going up.
Yes. But still, if you would pick up the top, I know there are many trends that you can pick up. What would be the top, say, 2 or 3 trends that are staring at you in the face?
So the newer ones are like, say, a rise of capital market, like rise of retail.
Okay, so capital market individuals.
That's very close to me. So I'm saying that. Second is the build up in the savings boom in India from $10, $12 trillion in last 25 to $125 trillion of savings.
So that would be mutual funds or banks?
Now this is where one has to figure out. Banks, of course, will be beneficiary because bank is a scale economics and you need. So they are going to be very large beneficiaries. Second, of course, all the asset management companies, broking companies, your CDSL, NSEs, BSEs, whatever comes on the advices, all the wealth will be so much. You need all the global wealth managers will be sitting here, I'm telling you, in next 4-5 years. They'll all open shops.
Yeah, so certainly financial sector, capital markets.
So that